Hello again, Maverick traders, and welcome out. This is Sonkit from Maverick Currencies, and let's begin a market coverage. It's a Tuesday, April the 25th. Let's get into it. Market had a nice movement across the board today, and we can see that in the percentage change. S&P down 1.58%, World Stock Index down 1.63%. So equity market continues to be on the weaker side, while the crypto market had a nice little jump, 1.83%. Gold had a nice little bounce as well, and the oil market continues to stay weak with 2.01%. So overall, equity markets were weak across the board, while the bond market, the yields actually continue to extend the decline that we talked about yesterday. So overall, we can see in the equity markets, we were in this little tight trading range, and volatility was very low. So we've seen a nice pickup in volatility today, and we are now broken below this 20-day moving average. So this is where, a lot of this chop before we got this nice little move here. So at this point, we will be breaking it down. The market score comes down to a +1 as we have broken below this 20-day moving average. So next 24 hours could be interesting. Market could try to fight back and try to reclaim the losses from today. After hours, earnings came out from Google and Microsoft, and they all beat expectations. So I wouldn't be surprised if the market had a little better day tomorrow. Now, taking a look at the bond yields, and this is another thing that we want to talk about, is that the bond yields is now weakening. So we are still expected to see the FOMC raise rates in the coming weeks, but the bond markets continue to show some sort of risk-off event here. So overall, it's trading in a range. We need to see a break in order to really spark a big risk-on and risk-off. So a lot of consolidations that we're noticing across the board, along with the crypto market, which had a very nice bounce and a very nice little breakout that took place, and then we broke lower, and now we're just trying to recover here. But at the same time, I don't love this chart setup because this is again not a healthy pullback. This was a much deeper pullback. So unless we can get above this range here, I would be looking to sort of be on the sidelines on the crypto markets. Now let's take a look at everywhere else, and starting with the cryptocurrency, and we can see that the cryptocurrency today, we've seen the Litecoin continues to outperform. We talked about this in yesterday's recap, where it's just playing a little catch up to the Bitcoin. So outside of that, Bitcoin had a nice bounce, 1.93%. Bitcoin Cash was not, and we have seen nice movement in Ethereum as well. But again, this could be just bounces that coming in place after a steep sell-off that we noticed last week. Now, let's talk about currencies, and this is where things get interesting. We talked about yesterday how uninteresting the movements have been in the FX this week. And so far, you can see today was a more eventful day, but I want to highlight where the movement was. The Japanese yen, the US dollar, and the Australian dollar. You should really look at anywhere outside of that. Nothing would really moved substantially. Swiss franc down 0.2%. Euro was flat. We have British pound down 0.14%. So all the other currency baskets were mostly flat. So really, big movements came in because the dollar was strong and the yen was strong. So if you were pairing euro dollar, pound dollar, they all had a nice decent move today, but that was entirely up because of the US dollar. So the big movement was between the dollar, Aussie dollar, and Aussie yen, and that's because Aussie is also underperforming. So if we compare Aussie to the Kiwi, look at the divergence there. Aussie against the CAD, big divergence there. So continue to see that weakness as we go into the Aussie CPI report tonight, but we are heading up against a key resistance level that we need to be aware of. Now, looking at the market outlook, we were at a +2 yesterday, brought it down to a +1, and this is the market that's still flip-flopping back and forth. This is the first day of this drop right here. So I would like to see some further continuation, maybe an inside candle tomorrow and a further continuation in order to set up a trend. But until then, this is just a one-day move that can be reversed. So we have to really look at next day and see where we get the follow through. As far as the news event goes, I really like to be active around these events around times when volatility is low. So let's take a look at what we have on the docket. Tonight we have the Aussie CPI. Remember, last week we had the Kiwi CPI, and that had a nice movement to the downside. One of the patterns that we're noticing is like all the CPI numbers except UK, and actually overnight we had Japan CPI was higher as well. But outside of those two, everything else is coming in lower. So this is something we need to pay attention to. If this is going to be coming in much weaker, how is this going to impact the Aussie, which is already very weak? Something to pay attention to. Not a whole lot tomorrow, and then I really like Thursday and Friday, especially if you're looking to trade the US dollar, as we get the US GDP, and most importantly, we get the PCE price index on Friday. So I really like Thursday and Friday to trade the US dollar, but until then, the next day, next 24 hours, could be just an inside candle where markets try to digest some of the moves from today. Now, looking at the velocity score, it's clear that the Aussie is the weakest out of the bunch, followed by the Canadian dollar. I mean, we are seeing very concentrated moves that just happen and just continues without much volatility. If you take a look at Kiwi, last week, Kiwi was the worst currency, and Kiwi is actually very flat today, or in very flat this week. So again, why is this happening? We're just taking currencies taking turn. We covered this topic in the weekend currency room, where we were expecting to Aussie to kind of switch it with the Kiwi because it's going back and forth where they're not both going down at the same time, but they're kind of taking turns. So we are noticing Aussie is the one, and this is where we need to pay attention to what currency is going to be in play in the next 24 hours. We had the Japanese yen that also nice little pickup here, but overall, as you can see, the trend score are not that strong. So we're just getting a bigger velocity score, but the trend scores in none of these currencies are really strong. The only currencies that are actually looking strong are these European currencies, but they actually had a pullback today. So are these pullbacks a buying opportunity? It could potentially be, and something we need to take a look at in the possible trades coming ahead. Now, let's take a look at the markets here. After hours, we had the U.S. bank earnings. As you can see that some of the earnings, Google, Microsoft, they came out, beat expectations. So we're going to see a nice little pop in the after hours. So if this continues overnight, we could see a market sort of try to make a recovery here. You can see we had a nice little drop, but then again, right now, as I look at this chart, we could be finding some support here. So next 24 hours will be interesting, especially if you're looking for a follow through. So let's talk about currencies. And a US dollar, you can see, is just trading sideways. Even though we had a nice little update today on the daily chart, you can see that we have a nice resistance up here. So not a good trending currency, but it is having its days where it is either the worst currency or it's the best currency, but not really following a strong pattern. Now, same thing goes with Japanese yen. You can see how it actually tested the support level here, but then it's still below the 238 in the 50-day moving average. So should we expect a follow through? I mean, that is something we need to pay attention to. For now, I mean, these follow throughs are not really as consistent. So we're going to be very careful. If this does pull back and start to rally a little bit, again, maybe there's a buying the pullback on this opportunity. But I mean, overall, you got to keep an eye on those overall big trends, which is not really going anywhere, which means that we should be taking a look at markets on a day-to-day basis. Now, look at the euro. So euro, as you can see, had a nice little pullback. We are still above the 20, still above the 50. And let's go on a 4-hour chart. This looks like a nice little bull pullback to me. If this gives up this term 20 moving average and maybe tests this prior breakout point, I would say maybe this is maybe a buying zone coming in here. If this gives up both the 20 to 50 and falls below, then we will be abandoning the ship for the euro. Maybe the move on the euro is done. But for now, it's still a buy the dip opportunity here. Now, Swiss franc, one of the very stubborn currencies. I mean, as you can see that really not pulling back whatsoever. So all time frames are pointing out to the upside. In the shorter term, having a little pullback, but these pullbacks could be reversed quickly as it tends to really match its overall direction. It does look extended, but at the same time, this is really what's been outperforming. Now, British pound, exact same thing. I actually don't like this as much because, again, British pound did fall back into this range again. You know, we had a nice little breakout, and we are now back within the range. So at this point, this can go a little sideways here. If this is going to actually recover a little bit higher and get above that range again, I'll like it to the upside. But for now, I'm not really a big fan of the British pound. Now, let's talk about growth currencies. And they all look terrible. I mean, look at CAD. I mean, daily chart, I just want to point out, look at the consistency of these moves. We haven't really had this many bad days in a row in the Canadian dollar. So this is 1, 2, 3, 4, 5, 6, 7 days of down move. Could we be finding a little short-term bottom here? Again, right now, let's look at the shorter-term time frame. So all the short-term time frame look extended, but maybe there could be a bounce coming in. But again, that is just not indicated in any of the time frames. Everything is still pointing lower. So if things look extended, you can always say, you know what, I want to wait for a base, or I want to look for a bear rally to jump into. But then you also need to see the shorter term turn around in order to give you the confirmation. As you can see, none of the time frames are pointing that out. So I would say this might continue to slide towards the downside unless it can give me a nice reversal candle. Now, looking at the Aussie, I mean, look at that drop today. It got us down to this support area. And I want to highlight, as you go back in time, I want to highlight how important this level of support is. And now, multiple times in the last 2 to 3 years, 2020, 2021, and 2022. I mean, this is a very important level of support. So we need a lot to really break down out of this. So as much as we like the way things are looking, I just want to kind of provide a little caution here that we could potentially see sort of a reversal that has taken place in multiple times. And if it does break this level, I think there's a lot more further downside risk in the Aussie. So something to keep an eye on. Very important level to, especially if you're looking for a breakout. And we have the RBA, we had the CPI numbers tonight, and that could provide a further catalyst to the downside. But remember, we need a confirmation, which means that we need a clear breakdown. It holds that level. We don't want it to poke lower and then reverse back. And which again, something I'm paying attention to tonight, where we could initially get initial move to the downside and then get a quick recovery. So we don't want that. We want to wait, get a daily confirmation in order to see if that is really breaking lower. Outside of that, the Kiwi, I mean, look at this channel that's been trading in. And again, it has been really taking turns. Today, Aussie was the one. Kiwi did not take part in any of the movements here. So right now, what we are seeing, consolidation. So let's just continue focusing on the Aussie. And once the focus goes away from the Aussie, we can jump back in the Kiwi. Technicals, everything still looks weak on the Kiwi. This is just a bear rally. So you just have to really know when to be trading and when not to be. And right now, it's not really Kiwi is that the strongest currency. Kiwi is just the one that is not taking part out of it. So it's pretty clear where the movement is. Now let's take a look at where we are and look at the double top that we got in the euro dollar. And 105, 110, 110.50 is the level of resistance. On the bottom side is 109.50. So technically speaking, this is just a typical range-bound price action. This is not trending. This is moving back and forth within that range. So if you are dealing with the range, then you have to support that support and resistance level. If this breaks this 20 moving average, which is at about 109.40, this can have a further downside to 107.83. But it needs to break that level. Right now, it's very close to the level, but it's still holding that level. So I'm very neutral on this. Maybe there's a buy the dip opportunity in some of the euro crosses, but we have to wait for that. And remember, we have on Thursday and Friday, we have the US data coming out. And I think those are the great opportunities to really jump into some of the dollar crosses. I mean, same thing going with the pound dollar. They all are holding in around these levels and the 20-day moving average. So until it really breaks the 20-day moving average, we don't want to be as aggressive to be playing on the downside. And be careful on the upside because we have a full body candle, which means that it's still not reversing its course yet. It's just making a little short-term base. We have a lot of other currency pairs. Like I had questions about Kiwi CAD. I mean, you got to take a look at how the Kiwi is doing. And technically speaking, this is trending lower, having a nice little bear rally. But we can see the same thing with a lot of these Kiwi crosses. You know, they are making a little basing pattern here. Look at Kiwi dollar. Aussie dollar broke lower, but Kiwi dollar is holding in. So 61 is the level of support. If it breaks lower, I will be interested in that. But look at that. All the mixed mash of moving averages here, not giving us a great signal. Aussie dollar, on the other hand, it's still at 66 level. It has a lot more room to give up if this wants to continue moving lower. So we have to wait and see how that goes. So again, next 24 hours could be just an inside candle. What I'll be focusing on is the Aussie crosses. Let's take a look at Aussie Kiwi. Very nice little drop. I mean, look at that, 109.20 to now 107.88. Very nice little drop in the last 3 days. I mean, if you take a look at the highs to the low, percentage change, it's been a very nice percentage change, down 1.19%. So should we expect to see this rally higher, or is this just a buying the bull pullback, or is this sort of a continued sell-off? I mean, right now, as you can see, we are running into the prior resistance, which is now the support. And this could be tricky because, again, Aussie's already weak. I expect CPI numbers to stay weak, which means that we could get an initial push to the downside. But the question is that push to the downside will last, or would that reverse? I think that's what really we need to be careful about trading these Aussie numbers. Same thing, we can take a look at Aussie against the yen. You can see that. Nice drop today. Nice drop today. Base, a drop here. Little bear rally, a drop here. But again, the yen crosses are very active, which means that it's likely to have a lot of aggressive moves back and forth. So at this point, Aussie yen actually looks nice here as well, but there's a nice support at around 87. So we have limited ranges to work with. So you just really have to take a look at where you get the good risk to reward. We want to be using that. Outside of that, keep the powder dry. You know, today was after a very quiet period. You know, we had a nice little movement today, but next 24 hours, we have to really see if there's any sort of continuation to it. And if not, we will just be looking to trade the news events, which, like I said, on Thursday and Friday, they're going to be good events for that. So till then, take care, have a good trading, and we'll see you in the next update. Cheers.